Today, I would like to share about personal financial planning and how it is related to the current financial challenges faced by Malaysia young today. Okay, firstly, personal financial planning is the process of managing our financial resources to achieve both personal and financial goals. It involves making smart decisions about how we spend, save, invest, and process our money. This process is not something we do once, but it's a continuous, lifelong process that helps guide us toward financial security and personal stabilification. The importance of financial planning cannot be denied. It improves our quality of life by reducing financial stress and uncertainty about the future. With a good financial plan, we can be better preparation for emergency, retirement, education costs, and other future financial needs. Okay, next, in financial planning, there are several key areas that we need to focus. This include consumption and saving planning, debt management, investments planning, insurance planning, and retirement preparation. To support this area, we also use financial tools such as balance sheet, income statement, and cash flow statement. This tool help us to track our financial position and plan how to improve it. Okay, next, another important concept is the time value money. This means that the value of money changes over the time. For example, the value of RM100 today is not the same as RM100 in 5 years later because of factors like inflation and interest rate. So it's important for us to learn about compounding, discounting, annuity, and how to calculate present and future value to make better financial decisions. Okay, relating this to the current situation in Malaysia, we can see how poor financial management affects many young today. The rising number of bankruptcy cases among young Malaysia show a bigger financial issue in the country. Many young people take on personal housing and vehicle loans without fully understanding the repayment terms, combined with high living costs and lifestyle pressure. It makes the problem worse. Okay. In conclusion, personal financial planning is not just a theory we learn in the class. It's a skill we may apply in our daily life to avoid financial difficulty in the future. With proper financial planning and education, we can secure a better, more stable financial future for ourselves and contribute to a financial resilient society. Okay, thank you.
Let's move to financial issue. Young people nowadays easily get influenced by their friends' lifestyle. They try to follow the same trend, but their income just isn't enough. So, what happened? They use credit cards or take personal loans just to cover their expenses. Factor contributing to young people bankruptcy: first, business loan. Many young people have the spirit of entrepreneurship, but unfortunately, many start business without proper experience, financial planning, or understanding the risk. They take a business loan as capital, but when the business fails, they can repay the loans. Eventually, the debt fill out and lead to bankruptcy. Second, housing loan. Many young people see owning a house as success, but high property price and low income make it hard to afford. They take large loan without considering extra costs, and when living expenses rise, housing payments become a burden, leading to risk of bankruptcy. Third, vehicle hire purchase loan. Cars are a necessity, but many young people choose expensive model beyond their means. Hire purchase vehicle loans are another major reason why young people struggle with financial commitments. When monthly installments are too high, then on top of full maintenance and insurance, it creates financial pressure that leads to missed payment and debt. And lastly, credit card debt. Credit cards allow easy spending, but without control, many young people use them for lifestyle needs or daily expenses. With high interest rates and low minimum payments, the debt quickly multiplies if not settled.
Why this happened? One of the reasons why Malaysian youths need to make loans and have a high debt is because of low income. This is not just a problem for young people, but also for families with low incomes. This means young people have to take jobs with low wages to support their families. Students graduating from university and college were also required to pay their loans, but many were unable to do so because of low income. Other than that, it is because of digital spending habits. It's so easy now to buy things online and defer payments through installments. With buy now, pay later BNPL schemes, it encourages them to overspending. Missed payment on BNPL plans lead to late fees and increased interest rates. This led to debt accumulation. Third, spend money recklessly. Especially when relying on credit cards, young people have temptation to buy things that they don't need in terms of self-reward, fear of missing out FOMO, and the illusion of free money that create from using a credit card. They think that if they use a credit card, they can buy anything without looking at the price tag. That's why it leads to overspending. And lastly, lack of financial literacy. Young people currently have very little experience with financial planning. They even struggle to make their own financial decisions because personal finance is not usually covered at school or universities. Therefore, they are vulnerable to debt and other financial problems that lead to bankruptcies.
Bankruptcy among Malaysian young has become a growing concern due to a poor financial literacy, overspending, and reliance on credit. To address this problem, it is important to explore practical solutions and recommendations that can help youths manage their finances properly and avoid falling into debt traps.
Next, I'll be sharing some key recommendations and practical solutions to address the rising issue of bankruptcy among Malaysian youth. Let's start with 3 main recommendations to help solve this issue. First, promoting responsible borrowing. We must educate you about financial literacy, especially on the importance of responsible borrowing. This includes understanding long-term interest rate and the risk of defaults. Awareness campaign and school-based financial education can make a big impact. Second, government policy support. The government play a crucial role. They can introduce policies such as subsidies, financial counseling, early warning system for debt risk, and tax incentive for those managing finance well. Third, employer involvement. Employer can also be part of the solution by providing financial wellness program, offering salary advance with no interest, working with financial institutions to help employees manage debt wisely. Beside recommendation, here are 3 practical solutions we propose to implement directly. First, Youth Bankruptcy Support Fund. A support fund can provide temporary financial aid or restructuring support for youth facing bankruptcy. This fund would act as a safety net while they get back on track. Second, stricter lending regulation. There should be stricter regulation on lending to young borrowers. For example, setting limit on credit for individuals with unstable income, or requiring mandatory financial literacy courses before approving large loans. Third, youth debt cap policy. Lastly, introducing a youth debt cap policy where individuals under a certain age or income threshold are limited in how much debt they can accumulate, can help prevent overwhelming financial burdens. Okay, that's all from me.
To end our presentation, let's take a quick look at the main points. Bankruptcy among Malaysian youth is a growing concern. One major reason is the lack of financial literacy. Many young people don't fully understand how to manage their money. They often tend to follow the trends of peer pressure even when their income is limited. This leads them to rely on credit cards, personal loans, and other forms of debt, eventually risking bankruptcy. To prevent this, financial education is a key. Youth must learn to budget, save, and make wise spending choices. A good financial plan can help them prepare for the future and avoid debt traps. But this issue also needs support from others, the government, and introduce stricter lending rules and financial support policies. Schools and employers can provide financial education and awareness programs. Ideas like the youth debt cap policy and support funds can also be useful. Lastly, understanding the time value of money helps youth make smarter long-term decisions like investing early or saving consistently. In conclusion, with the right knowledge, habits, and supports, Malaysian youth can avoid financial problems and achieve financial stability. Thank you.